What's up, Crypto Gang? Welcome back to another episode. If you guys are new here, we do a giveaway at the beginning of every single episode. Today's winner is James Brasfield. Thanks so much for liking and commenting with your wallet address on the previous episode, James. If you guys want to win, like, comment with your wallet address, and don't forget to subscribe. On this episode, I sit down with Mark Moss from Market Disruptors. He is a brilliant guy when it comes to market analysis and a very successful entrepreneur in all different aspects of business. So it was a lot of fun to sit down with him, talk about some small bits of economics, and he's just an overall nice guy. So let's dive right into the interview. I am here with Mark Moss from Market Disruptors. How you doing, Mark?
Hey, I'm doing great. Great to be here with you.
Awesome. So a few of my viewers have been really interested in the fundamentals of trading, and we got to meet in person in Vegas, but just kind of give us a high level of how you got into crypto and your story.
Yeah, so just a super high level of it. We don't have a lot of time, but I've been an entrepreneur and an investor for over 20 years. I like to say that I'm just old enough to have lived and actually invested through multiple bear markets, and yet I'm still young enough to kind of grasp the movement and the technology that's happening. And so I started investing in real estate in a crash in the mid 90s. I started a .com business in 2000 at the worst possible time after the market had crashed. There was no shopping carts available. I had to build it. It was very expensive from scratch. And I went to these brands and I said, hey, I built this website. I want to sell your products on my website. And they laughed at me and they told me no one would ever buy anything online. And I said, well, I think they will. And I spent this money and I built the website. And they said, we won't even take your money. So I've been here before. So I'm an online pioneer, I guess. I've been online for a really long time. Multiple seven-figure businesses, Fortune 500 exit, $20 million in real estate developed, gold and silver, oil and gas. So lots of investment stuff. How I got into crypto was I've always been like a big picture, kind of a macroeconomic guy, and looking for fundamental, investing things. And when I first learned about Bitcoin, it wasn't really, it didn't catch my eye as an investment. It kind of did, but it looked like it was like a speculative, gambling type of deal, which I typically don't get into. The risk to reward, I didn't see the risk to reward for me. But when I actually learned why Bitcoin, and what I learned is I was actually on a path of trying to set up foreign bank accounts. I was looking to set up a bank account in Singapore and one in Panama. Those are two of the best banking centers in the world. And my goal was I didn't want just like you would diversify your portfolio, I wanted to diversify my life. And I didn't want all my money sitting in the United States, because if something happened in the United States, that's a lot of risk for me. And in this digital age, I mean, everything's wire transfer, check, debit card anyway. So what difference does it make if I have a Singapore and one there in Panama? So I was actually talking to an attorney in Panama. He was going to set up this trust and do all these things. And if I forget, like 100,000 in the bank there, I make really good interest, and it was all looking good. But then when I saw Bitcoin, it was basically the same thing. It allowed me to take money out of the U.S. Banking system and put it into a new banking system. And so that's what it was for me. So I'm like, great. So I put a bunch of money into Bitcoin. And it wasn't, like I said, the investment piece, but it was the why Bitcoin. And that was in late 2015, early 2016. I think Bitcoin was in the $300 range. It obviously went up big time. And then it made me go, hang on, let me see what the heck is going on here. And then of course I was just sucked right into the rabbit hole. But really for me, it was learning why Bitcoin and learning about this, the revolution of how it can bring our power back, allow, censorship resistant money, mutability, which is awesome, but also hard sound money economics. And then I was just like, I need to tell as many people as I can about this. I want everyone to know, because I want to help usher this in. And then it was maybe like taking like an evangelist type role, right? So anyway, that's my story.
That's awesome. That's awesome. Yeah, I think it's very similar from all the people that I've talked to about their story. Is like, just they run into it, and then, like, for example, with me in 2013, I saw a sign outside of MIT Sloan when I was living in Boston that said, stick it to the banks, buy Bitcoin. Yeah. And I remember like, oh, what's this thing? And research it. And I had a similar thought as you, where I was like, this seems like some sort of gambling concept. Like what are people doing with it? And once I started learning more and more about it, and realizing that there was scarcity involved, it was really at that point I was like, all right, this is actually sound money, and it can actually perform as a bona fide asset class in the future, just based on speculation. So I was really interested at that point, and then
what piece got you interested, right? So like I talked about like trying to opt out of the banking system or get money out. You're a economics major, I think, right?
Yeah.
So like you understand money. So like what exactly was what piece was it that attracted you, if there was one?
I think the first initial piece was the scarcity part to it, where you have the Fed that's printing money constantly, and then you have the 21 million that's finite. Like that's the actual amount that will ever be in circulation, and there's no printing more. There's nothing after that. So
the sound money principle.
Yes, exactly.
Versus the fiat money principle that we have.
Yeah, where you have politics coming into the picture, and it makes it exponentially more complex when you have all these political people pulling strings, asking for bailouts and things like that. Like there's just all sorts of crazy things that can happen to that. So that was the initial push. And then when I realized that, like, I think it was 6 million had been lost and stolen, I realized, okay, it's even more scarce than what it's, everyone talks about. So when I realized that it was more scarce than I actually thought it was, I was like, okay, it's time to accumulate as much of this as possible. And also in studying econ, I did a lot around game theory, but mainly I was studying around the different depressions. And with the Industrial Revolution, a lot of people hedged with gold, like physical gold. And now, people aren't necessarily building as many circuit boards, and they're not really using that much gold other than for like this sort of, a ring or something like that. But I think now it's more so people are going to hedge in the digital realm because everything's online. So it used to be physical, and now it's going to be digital hedging against what's coming. So that's, I guess the trifecta of why I was really interested in it.
Yeah, cool. It's interesting, especially having like a formal education in economics, because a lot of times you're really not learning about like hard sound money. It's really, if they call it Keynesian economics, right, where it's more about spending, right? We want to juice the economy by spending, not saving, and it's a giant fundamental difference that most people don't get, right?
Yeah, very very much like I've told viewers in the past, like the concept of like a fax machine, where one fax machine is worthless, but once you have 2 fax machines, it goes up in value, and then once you have 3, it goes up even more.
And network effect.
Exactly. Boiling that down to the point where once you have dozens or even hundreds of thousands of fax machines, your network is way more valuable than when you started with that one. So Bitcoin's done an amazing job of sparking this sort of network effect on its own, because everybody's evangelizing, everybody thinks that it's the next, internet type concept below it. So I really love the idea of thinking of it as like the fax machine.
Yeah. And what's cool about it is, with the 2017 boom, obviously you had all these people jumping in as speculators and gamblers, but for me and even you've been in longer, really you have like true believers.
Yeah.
Right. Like I didn't get into this for the money, and you didn't either, right? So and we have a core base of that, and that's why it doesn't go to zero. That's why every low is higher than the previous low, because we have more true believers in, and it's because it's of this revolution that it's going to create. And I think, the genie's out of the bottle, and, if this doesn't last, like there's another one that will be behind it, now that we have a technology that allows us to have censorship resistance, immutability, et cetera, it's never going to go away.
Yeah. Yeah. And very similar, a lot of the things that I described to people when I was doing peer-to-peer lending in 2014, banks were shutting down our bank accounts. Like they didn't want lenders like mom and pop to be able to fund someone's loan. Like they wanted to be able to control that. So seeing what banks did to kind of close on ramps, then I do think that this is going to be. I remember listening to your talk in Vegas. It was really resonated really well with me, where you said they shut down the on ramps last year, and they've been spending all this time kind of preparing, and people don't really think like that. And it was a great perspective of how things work, like with banks in the background, and then planning, and then.
Yeah. So I just did this video. And I said, understanding the key to riding waves is understanding the forces that move the masses. And so this is like fundamental investing, right? So when the banks did that, when they shut the on-ramps down that you're talking about, okay, that moves the masses. So how is that going to change things? And so it was interesting, but to kind of expand on that for a minute, right? So very simply, a lot of times we can make investing very difficult, but you can always boil it down to like core basic principles. And so markets stop going up when there's no more buyers, and they stop going down when there's no more sellers. I mean, it's simple, right? And last year, even though it seemed to be all the frenzy, really it was like 1 or 2% of people, had gotten into crypto. So it was pretty small. And of course, as it was making mainstream headlines, more people were hearing about it and wanting to jump in, but it was still a small percentage. And so basically the amount of people were getting maxed out. We were running out of buyers. And in order to get new buyers, more people have to hear about it. Well, simultaneously coordinated, right? Like you had Facebook, Google, Twitter, everybody ban advertising. So nobody could hear about it anymore. And then all the banks, as you just brought up, right? All the banks shut off on-ramps so people couldn't even buy. You couldn't connect your bank accounts. You couldn't use your credit cards. So they shut the money down and they shut the marketing down. And then the market ran out of buyers, very simply, And it was very coordinated in a sense where, like you just mentioned, right? So then it's been shut down for a year. You have TD Ameritrade, Fidelity, ICE-backed, all building these products. And as soon as they announced they're coming online, well, guess what? Magically, Facebook, Google, Twitter, they all open up advertising again. Yeah. But I can't advertise on there. You can't advertise on there. Only approved cryptocurrency can advertise on there. So, if you understand the whole dark world of banking and finance, it's all one piece. And so, people may want to think conspiracy, tin hat, whatever, but like when you look at the facts, I mean, it's hard to kind of deny that,
Yeah. Yeah. There's definitely some table that they're all sitting at some point or another.
One thing that you said that's interesting is this peer-to-peer lending and how the banks frowned on that and shut that down. And I never really thought about that. So it's cool that you brought that up. But like, for your viewers, if they don't really understand like the history of central banking or what central banking does and how money is created, some people may still think they print dollars somewhere, but obviously they don't. And really where money is created is through debt. So what banks do is if the bank wants to loan you $1 million, it's not that they have $1 million to loan. They're just creating the loan. You owe them because you owe them. And that's how money is created. So when you start loaning money peer to peer, you're taking away their ability to make money, to create money. And so they create money and then they earn real interest back out of fake created money. So anyway, the peer to peer is, it's taking that away. And like I said, I never thought about that before, but that's cool that you bring that point up. But Bitcoin is also kind of the same way. So I talked about how wanting to get money out of the banking system. And if you understand how the banking system works, we have fractional reserve. So if I put $1 in, they could loan out $9 or whatever basically on that. So when I put $1 in, they're making 9, but the reverse is also true. If I take $1 out, they have 9 less dollars to lend. And so it's exponential. Both giving it to them exponentially grows debt, but also taking our money out of the system exponentially decreases it.
Yeah, definitely. Well, I know we're running short on time, and I want to make sure that everybody knows where they can find out about you. So what are you working on currently?
Yeah, great. I love talking about this kind of stuff. I have this video. So I have a YouTube channel called Market Disruptors, and I'm always talking about these kinds of subjects. So if you enjoy hearing this, check it out. But I just did this video on kind of what's going on over in Paris with all these protests. And I talk about how there's a pendulum that swings and it has an 80-year cycle, and it goes from a we cycle, all about we, which is collectivism or globalism, and then it switches back to a me, which is individualism or decentralization. And so we can trace back hundreds of years, and we can see how every 40 years we go from a centralization to a decentralization cycle. And right now we're peaking at the centralization cycle. And now the pendulum is starting to shift back to decentralization. And we can see that with Brexit, Italian referendum, Donald Trump, and now what's going on in Paris. And so we can see this is going to swing back to decentralization. And so as an investor, we want to invest with the trend. And this global trend is shifting to decentralization. And we have a technology now that's going to enable us. So it's really amazing. So anyway, I talk about these kind of subjects. Go to Market Disruptors on YouTube. Just search that. And I just give this education, and then I have a business as well in the crypto space, and it's really just education and training, and it's called Signal Profits. You can. I wish we could chat for another hour or two, and I'm sure we will offline.
Definitely. Cool, man. Well, thanks again.
That's it for my interview with Mark Moss from Market Disruptors. If you guys want to check out his channel, the link to it is below. There's also a link to Signal Profits, which is his project, below, so you guys can go check that out as well. But if you guys like this video, slap a like. If you guys are new here, don't forget to subscribe, and I will see you on the next episode of Crypto.